The new 992.2 GT3 is on its way with a hefty price tag and has the potential to shake up market prices by pushing prices up or down. There's no shortage of forum threads speculating about future prices and even market crashes. But what does the data tell us? Welcome to the quarterly GT3 market update. In this video we'll dissect the latest price trends for all GT3 generations and assess if right now is a good moment to buy a GT3. We'll focus on the US market, but also cover the German market at the end. We'll start with the 992s. Over here we have the price trends broken down by the touring and non-touring variants. There are a few important things we need to talk about. We can see that prices came down during 2022 when the complete market corrected. After that, the trend turned. Prices were exceptionally stable during 2023 and mid-2024. A rare phenomenon for such a new car. During the last 6 months though, the non-touring market broke. The price trend turned down, resulting in a drop of 5.2%. Prices for the touring variant increased by 2%. This latter increase isn't statistically confirmed, meaning that it could be the result of chance, while the drop is confirmed. Now if you remember, we saw in the previous GT3 market update that a little bit of price weakness crawled its way into the market. Unsold inventory discounts increased a bit, and clearly it materialized now. The trend break needs to be interpreted with care. Prices fell in the non-touring market because more high-mileage cars were put on the market. The average mileage increased from 3.2 to 4.8 thousand miles in the time span of only 6 months, whereas it historically increases by jumps of 200 miles. In other words, the drop is driven by a mileage increase. Practically, this means that your GT3, which has been stored away during the last 6 months, hardly lost anything. Correcting for the high mileage increase, we're looking at a drop of 2.5%. Visually, we can see this nicely when we look at the price trend broken down by mileage buckets. Over here we can see that it are the prices for the high mileage cars, so the ones with more than 4.5 thousand miles, that are mainly responsible for the decrease. It's in this market segment that both supply and the average mileage increased. So the stable trend in the non-touring market broke, but prices aren't in free fall. In fact, even with the recent correction, prices are still high, and it's fair to say that the overall market is still relatively strong. A high-spec example could easily go up to an MSRP of $240,000. The current median price though is still $269,000, implying that prices are still above MSRP after all those years. Even the oldest, high-mileage cars will set you back at least $225,000. Now unsurprisingly, this market break in the 992.1 segment didn't trickle down to the rest of the generations. 991s, 997s and 996 prices remain exceptionally stable. Looking at the 991 non-touring variant, we can see that prices are drifting lower at a stable and low rate. .2s lost 1.7% during last year and .1s 2.2%, resulting in median prices of $190,000 and $140,000 respectively. Prices that are above pre-pandemic levels. But these numbers and all the other ones are before inflation correction. After applying this correction, we can see that prices have been lower than before the pandemic since mid-2023. If we move on to the 997 generation, we can see again strong price trends, but we need to be cautious. 997s in general, and especially the .2s, are extremely rare. Prices for the .1s dipped slightly during the market-wide price decline, but recovered strongly and even rose above the pandemic top. This is something that only applies to a few models. Compared to last year, prices are up by 14.5%, an incredible result. .2 prices never seem to be influenced by the 22 market correction. They only slowed in 2024, resulting in a year-over-year change of minus 1.1%. But again, this result is based on a few cars only, so use it with caution. Finally, we have the 996s. Similar to the 997, the correlation to the rest of the market is relatively low. Prices increased longer than in the rest of the market and only declined in 2023. In the beginning of 2024, we could see a bit of weakness in the market. Back then, I warned that this was worth monitoring. Now we can see that it might have been a random fluctuation. The yearly loss ended up at 2.4%. Are you still with me after all of those price trends and numbers? Let's summarize. Over here I included all the yearly rates for the different generations. We can see now that the 9 and 2 depreciation rate clearly increased from the 2 to 3% to the 5% area. The trend accelerated downwards and entered a new phase. We can also see that the 9 and 6 market dip appears to be over, as the rate fell back to the level that we saw last year. 9 and 1 depreciation is low and stable. The fluctuations are more related to randomness than anything else. 9 and 7s in turn are incredibly strong, showing double-digit increases. I used the dot 1 market over here as a proxy due to the small market size of the dot 2 market. Now, despite the increased weakness in the 9 and 2 generation, the GT3 remains to be one of the slowest depreciating models on the market, and in general is an excellent choice for a value-conscious buyer. The average year-over-year price change for all models for which I'm tracking the prices on this channel sits at -5%. This is on the low side compared to what we've seen historically. Now, most cars lost between 9.1 and 1%. For the GT3 generations, this means that the 9 and 2 depreciated in line with the average. This is a good result. Most new cars tend to fall on the left-hand side of the average. The 9 and 1 and 9 and 6s lost between 2.4 and 1.1%, putting them close to the top 25% of cars with the lowest depreciation rate. The 9 and 7.1, of course, fully belongs to this group. So what do you do with all of this information as a buyer, owner or seller? All the depreciation rates that we looked at are descriptive. They told us what happened in the past, and they contain some information about what we can expect in the future, but they cannot predict long-term price developments. But provided you're a value-conscious buyer, you of course want to know how well these cars will hold their value in the future. Let's speculate about the short-term horizon based on the latest developments in the trends. Starting with the 9 and 2 generation, we of course have the new 9 and 2.2 that comes at a $40,000 price increase compared to the outgoing 9 and 2.1, and a $50,000 increase compared to the first 9 and 2.1s. Now, on the one hand, this makes the 9 and 2.1 look like good value for money, and this might drive demand up. On the other hand, we could see an increase in supply for the 9 and 2.1s, something that could push prices down. We can indeed see that market supply for the 9 and 2s is close to peak levels. Yet, this didn't materially affect the time that the cars are listed for sale, indicating that there's sufficient demand for this supply level. It's therefore difficult to directly link the introduction of the 9 and 2.2 to the trend change in the 9 and 2.1 market. So instead of trying to find the root cause, I think it makes much more sense to look at the data itself. This data shows depreciation rates between 2.5 and 5.2%, depending on the type you're looking at. There are no indications in the data that this will change anytime soon. In my book, this makes the 9 and 2.1 still a good buy from a value-conscious perspective. Most cars that are this new lose significantly more. 9 and 1 prices have been declining at a low and stable rate. There are no indications in the data that this will change anytime soon. In the .1 generation, you of course need to check the engine and the expiring warranty. But so far, that doesn't seem to be an impact on the prices. Expect a depreciation between 0 and 4% for this generation. 9 and 7s saw massive price increases, but the numbers come with a high uncertainty due to the low market supply. This makes it even more difficult to say something about the future price development. I'm therefore a bit hesitant to make a statement about it. 9 and 6s recovered from a small dip, and the price trend is now back where it used to be. There are no indications in the data that this will change soon. Again, this seems to be a solid buy for a value-conscious buyer. Now, as I mentioned before, you should interpret these price predictions as pure speculation. Also, you need to take into account that any major macroeconomic event can change the market completely. So what about the German market? Well, there are a few differences. Over here I added the rates of last year to the plot, so we can compare them to the US. The rates in the 9 and 1 and 9 and 2 markets are fairly similar. 9 and 2s in Germany came down by 7.2% versus 5.2% in the US. The German drop is confirmed and applies to all model years and mileage categories. Supply is almost a multiple of that in the US. 9 and 1.1s lost 3.5% in Germany and for the .2s this is 0.8%. Looking at the 996s, we can see a small increase of 1.3% in the .1 market and a massive surge of 11.7% for the .2s. It's mainly driven by the last 3 to 6 months, so we need to interpret this with care, especially given the small market size. In the 997 segment, we can see an 11.4% increase in the .2s and a 5.3% increase in the .1s. These increases are visible across all quarters, and this gives me more confidence in these rates than the ones for the 996s. I will include the graphs for the German market once I have a bit more data. And with that we arrived at the end of this video. Now if you enjoy this data-driven way of analyzing car prices, but would like to see a video for a different car, head over to my channel. Over there you'll find detailed market updates for a large variety of cars. Can't find the car you're looking for? Let me know the name of the car by commenting it down below in the comment section. Once there are enough requests for a certain car, I'll make a video about it. As always, thank you for watching, and I hope to see you again in 2 weeks for a fresh market update.